Good evening, everybody. Let's do an audio-visual check. How's it sound? Coach Hoop is in the chat. Now has that blue name. Always love to see some of the greater members here at Topstep continue to grow. It's a beautiful thing. How was Nick for a tick? How was Nick for the tick, everybody? I missed some of it. It's Sunday. We all know. It's a weekend. It really is. You know, wherever you're at around the world, it's either a Sunday or maybe it's even Monday night. Looks good, sounds good. He was great. I'm going to have to go through and watch that replay. That's the beautiful thing about being on the YouTube is you get the replay. It's great. He's going to be doing that on Sundays. I'm excited to do that. But now, let's get to it. Welcome everybody to Slow Markets. As always, I'm Coach Dakota, Coach DBA. There is our top step risk disclosure in the YouTube chat. This is not a signals class. We all know that. This is for educational purposes only. So the trades that you see me place, I have a coach's combine set up so that we could place trades. Of course, the way the class is going to be going is we do a rapid fire where I'll analyze NASDAQ, crude oil, Nikkei, and then we'll switch over to gold. And then gold at 8 p.m. Central, we'll try and see if there's an opportunity to take a trade because we see a spike in volatility around gold at 8 p.m. And then after that trade, we will do some trader statistics. So if you would like me to review your statistics, I'll go ahead and pin a link to the YouTube chat. Let's go ahead and I'm going to pin that right now. And please go ahead and if you want me to review your statistics, submit it there with a little bit of details. I think what I'm going to do this week, just to see how it goes, is do some Q&A and then maybe go through some strategy. And then at the very end, take a look at some statistics. So I'm going to mix it up a little bit. Just so it doesn't get so stale where it's like, okay, every night statistics. We're going to mix it up. Maybe I look at something like Tuesdays and Thursdays, I'm reviewing statistics, or Mondays and Wednesdays, I'm reviewing statistics. And then the other 2 days, I'm talking about strategies and other things in the market. I'm not sure. We'll see how it goes. I like to mix things up so it's not boring. It's not boring for me and repetitive because, you know, I have a very short attention span myself. And I do not like repetitiveness, even though that's kind of counter to what how I like to trade. I keep my trading boring, but when I'm doing a class, I don't like to have it boring. But let's get into it. You can see I have the NASDAQ daily chart here, and it's the start of the week. I'm really interested to see how Nick's class is going. I'd love to maybe coordinate with Nick. I'm going to be joining him tomorrow morning. During the fast markets, class, fast markets, me and Nick, tomorrow's Monday morning. And hopefully this week is a little bit more tame. Last week was absolutely crazy, as you can see on this daily chart. And I was going to just throw this on here. Let's go. We have our average true range. And I wanted just to point this out because I know I might have went over this a couple times, but it's very important. Let's make this very visible. Take a look at this. This was basically last week in a nutshell, the past week and a half, maybe 2 weeks. Take a look at this. This is how I like to gauge volatility, where the average true range every single day for the past basically year, 2 years, we could continue to go back as far as we want. But look at since mid-July. Mid-July, it's just been going up and up and up, where the average true range on a day, where we can expect a daily move to go about 260 to maybe 300 points in a day. And now we're doing that, in half the day. So the average true range peaked last week around, just over 500 points in a single day, which is absolutely crazy. You could see how big of a difference it was to where it's at now. So I'm curious to see if we get another, trying to do some, technical analysis on an indicator, but, maybe we see something like this, even more dramatic, where we see a huge decrease, in volatility. I don't know. I'm kind of I'm kind of on the fence. Do I want a decrease in volatility or do I not? I love consistency as a trader, but I also love volatility. Volatility can be really good when we are day trading. So I think it's give or take. I mean, the key to the volatile markets that we've been seeing is to scale down to micros. And so if you are able to practice proper risk management and scaling down to micros, volatility will be your best friend. Volatility is a day trader's friend. However, if you do not know how to manage risk and you are new to the markets, volatility could be the exact opposite. Volatility could be your enemy. It could blow your account. You could you run into a really bad situation when we have volatility like we have seen. So let's see. I'd love for the market to stabilize a little bit more. You can see we had this down tick back below 500 points a day. We'll see how it is. Tonight, I've been watching the markets a little bit, and we could see on the DOM, let me get this pulled over. Let's see. There we go. It's still not the best. Oh, I do not want to put an order in. So it's still not the best. However, it's a lot better than it was last week. Over here on the DOM in the NASDAQ, you can see the bid and ask is a little bit more tight, where we have sellers and buyers, closer together. The orders are still not great, you can see, but it's a little bit more healthy. I don't know if healthy is the right word, but it's not as ugly looking as it was. This past week, there was almost nothing. There was 5-10 point spreads. It was very ugly. This week, it's a little bit more controlled, even though it's still a little bit ugly. It's Sunday evening, and we will see. I like to see this on the DOM. I like to see that we've had a decrease in a daily range. And we take a look at Friday. Friday was a big indication that it wasn't that crazy, right? It was a little more tame, where here's August 9th, and we closed really close to where we opened. We didn't get a very big swing. The high was 670. The low was, 380. I mean, it's still right around 300 points, which is good to see. It's a normal day. You can see some of these normal days was right around there. But let's see. Let's see how this week goes. From a technical standpoint, I'm, of course, still going to be bullish. We're seeing a lot of consolidation around this 18,000 level, give or take 500 points, right? You can see there's plenty of resistance in this zone that we are at. There's plenty of resistance. And so the question that I'm going to be looking at going into tomorrow morning is, are we going to continue to break out? Are we going to see these 800s and maybe looking for a higher support and resistance zone to come back into play? Maybe we come back 18,000, 800s to 19,000. Or do we go back into this range and continue to consolidate while we wait for news, key data, some type of news to be moving the markets? I don't know, but we have to be prepared for both. And let's take a look at an hourly chart. And I'm a lot more bearish on the hourly chart than I am, of course, the daily or any of the smaller time frames. This is something that I'm going to be watching. This is going to be, I don't want to say key. Let me get this so it looks a little bit better. So I don't want to really say a key that I'm watching into this market, but I think we're going to start to see a lot of, from a technical standpoint, the way that I view the market, downtrend technical analysis like this, support or resistance line that could be coming into play. And since we've been in a downtrending market for, about a month, we're going to start to see some things like this come into play. Or at least we should, from my point of view. Where do we start to rally up, and do we find another area to test a downtrend line, find a resistance, and from the bearish side, opportunities to get short. But from the bullish side, looking for opportunities to get in on breaks. And we've seen this before, where we could break out, come back, test it, and then have that continuation. And this is looking from a bigger perspective, a longer term, a bigger picture from a technical standpoint. Of course, there's going to be a lot of things that we need to do in the market to get there. And the first one, I believe, is going to be, this is a huge support resistance zone. You know what? As I'm talking about it, let's take a look. What's the Topstep's daily indicator? I want to see how that's looking. Topstep daily levels. So these are the daily levels here at Topstep from Hoag and a lot of the experienced traders here at Topstep, where they put these levels, and it's really nice and convenient. And so I'm looking at this. The first one I see is going to be, it looks like there's two of them right here around 675. So 675 looks pretty simple. It really matches something that I'm looking at. This was support when we started to sell off early last week, and now it's starting to become resistance. And we break through there. We have one level right at the 18,800. And here's the thing. Here is the thing about the markets and when the markets get really volatile. When the markets are really volatile like this, the support and resistance zones become very big, right? Where we could see, their support here, next level we probably have this. So about 18,675. The next one is about 100 points above that. And, it's a lot difficult for me and in my own personal trading to really identify these key support and resistance areas or zones because the volatility has been so dramatic. You could see that, in an hour we could whipsaw, hundreds of points in this crazy market. And as I'm going to go ahead and I'll continue to bring these Topstep daily levels up and back because I'm trying to see how they match my current levels as well as the way I see the market. So we have this coming into play. We can see that this is a resistance trend line, I guess. This is going up and to the right. It's a channel that some traders can look at. We do have a higher high and a higher low. So I'm looking at this as a higher low. So last week, we made this big dramatic low during the peak in volatility, and we made a higher low, and we're continuing to make higher highs. So maybe this is something that we could pay attention to, is maybe we start to consolidate, coil, and then we look for either a breakdown of this pattern or possibly a break up out of this pattern as well. I'm going to watch this. The play for me is not to be buying the breakout as of right now because we have a lot of resistance, right? There's a lot of resistance in this zone and we're really close to it. So I wouldn't, me personally, be too comfortable buying a breakout. I would much rather wait for a pullback, look for an opportunity to get in long, and then take a nice, solid confirmation, looking to the long side. So I'm going to look for this pattern to continue. It's going to be interesting. As always, every single week, every single day in the market is interesting. There's always something new. That's why I love the markets. And yeah, I'm going to be trying to be patient, wait for the market to pull back, wait for this market to give me what I'm looking for, and then just really practicing patience from this longer term perspective. And then, of course, as we start to zoom in, we could see maybe shorter term trades play into effect. For example, if we believe that something like this can hold up, you could very well, if this is my target to the downside, there wouldn't be anything wrong with looking to take shorts and see if we could push back down. Of course, the first area I'm seeing, there's a lot of support here around these 18,420s, 420s to 430s. These are bigger zones. Maybe look for the market to consolidate around this area. And then, of course, if we do start to break down, I'm going to be looking for, this trend line to possibly hold. Now, remember, everything's a zone. This is not a signals class. This is just an interesting example of the way that I like to look at the markets, and I like to view these markets from a pure technical standpoint. So, yeah, maybe as we get close, it's interesting look how accurate this has been. Add this purely an example where we come up, test it, test it. Maybe one of these times when we go to test it, it breaks and we go straight up. But until then, maybe this is some opportunities to find a cheap trade. If I'm looking to short this market, yeah, I would say that could be an area of opportunity. just like the daily levels where they're not as signals, but it's just an area to pay attention to if it matches up to your own trading. So if we do get up there, maybe that is something where we could get in short around an area of opportunity and look for a cheap trade, have a relatively tight stop loss and look for some of these targets on the downside. So that's what I'm looking at going into the NASDAQ. It's going to be an interesting week from there. All right, let's move on to the next. So as I go through this, feel free to ask as many questions as you would like. We have an amazing team that's going to be going through this. And any of the questions that I do not answer, I will be able to get to them as soon as I can. So let's take a look at crude oil. Crude oil, let's take a look at the higher time frame, of course, this hourly. We sure are looking pretty dang bullish. I think it's similar as the NASDAQ, but crude oil is starting to test this upper resistance zone. Maybe we're starting to break above it. That's something that I'm going to really be paying attention to is, do we break above this, or are we going to just have a fake out and then have a continuation right back down? If we break, then yeah, I think it's going to be a nice opportunity to continue to look at longs. The first area that I would like to see crude oil to get to is this $80 a barrel. $80 a barrel has been a key support and resistance zone. And yeah, I definitely see us, if we do break, the way that I like to trade crude is retest and confirmation. We do have a lot of resistance around this 77. If we do get, was this a break? Because now it's kind of looking like a break to me. The more I zoom in, where, did we break out? And then did we come back down here and test this support? And then are we starting to consolidate, looking for a continuation up above? Like, that is something I'm going to be watching. I would much rather wait and see. I mean, to me, this is just kind of grinding higher. I would like a more solid pullback, and then maybe either a pullback to this resistance trend line or some type of a support area or support zone, and then look for opportunities to get along. But I'm a lot more bullish on crude oil than I've been, just because we're starting to test this downtrend and really start to pick up, steam and momentum. We still have a lot of downward pressure because obviously we're in a downtrend, and you can see how we've, this has happened in the past where we've rallied up, consolidated, and immediately right back down. So that can be the same thing. However, this is looking a lot more bullish because these, let's see, from a technical standpoint, I'm trying to think of a way to explain this. We are making higher lows and higher highs a lot more consistently, because you could see on this downtrend, we haven't really made higher lows or higher highs. We have a couple times, right? For example, and I'll zoom in on this. For example, we did make a higher low here back on the 16th to 17th, but we failed to make a higher high. And, there's a few examples of this where we've tried to make higher lows, but, maybe this was one where we tried to make a higher high and failed. But every single time we've tried to find and create any market structure to the long side, it's been failing. This is looking a lot more promising because we've had this beautiful pattern back at the beginning of August. I mean, it's kind of weird to talk that it was the beginning. We're already halfway through August, and we're consistently, breaking out. The pullbacks are not that deep. Of course, this could end at any moment, but if we do start to break out or, have another pullback, then find some consolidation and then look for a continuation. Similar to what I was looking at the NASDAQ, we could see a bigger move to the long side. I'm looking for this $80 a barrel to possibly be touched if we can see something like this. All right, let's take a look at Nikkei, and then we'll move on to the gold trade. Tonight, I'm going to be moving really quick. It is Sunday, and I'm considering most likely, ending class a little bit early, and I'll talk a little more about that as soon as I am done with this. Nikkei. we have an interesting pattern forming on the Nikkei. This is the Japanese market. This is a very interesting pattern. These are big moves, by the way. Like this market has been so volatile. Let's see. So this is a 7.5% move. So you can imagine 7.5% move, right back down, 5.5. And as we continue to, consolidate, these moves have been getting smaller and smaller and smaller, which is good. It's consolidating. It's, coiling, I guess maybe it would be the right way to say this. Very much like a spring or a snake, where we're coiling, we're contracting, and then if we do get a break in one direction or the other, we could see a violent move to the long side or a violent move right back down. The Nikkei is looking pretty heavy. I mean, this is a massive sell-off, and so if we break to the downside, it could get ugly really quick again. And fair is the same thing to say on the NASDAQ, right? As we go back to the NASDAQ, and technically you can say something similar. The NASDAQ's looking a lot more bullish because we haven't tested this downtrend as much. We're kind of just pushing up on the high of this pattern, but still similar. Looking into the future, if we do go coil and then we break down, things could get ugly really quick from a technical standpoint. Anyway, let's move on to this gold trade. Or let's move on to the gold market anyway. Gold market. Very much like crude oil. So if you remember the way that the crude oil pattern was, near the bottom, right? Near the bottom of the crude oil, we had this pattern, right? So if we go back to crude oil, see this pattern that we had? We had a flagging pattern and we broke to the upside, and we've been, buying the markets ever since. I don't know if this erases it, but we're going to find out. Nope, it doesn't. So it's the same thing on gold, right? We broke out and then we've been finding buyers ever since. So it's looking pretty dang choppy in around this zone. This is an ugly chop zone. If anything, maybe there's some market structure where we are making higher lows and higher highs. And if we do continue to break out, I could definitely see us going back up to 2,500, maybe testing the 2,500 zone here on gold. Let me take a look at the 5-minute. So trying to gain some more clarity. Yeah, definitely you could see this pretty clear, higher lows. So is this a higher low? And do we go back up and test? I mean, of course, I do see 2470s. 2470s being a key area. Let's take a look at the daily levels on that indicator. Topstep daily levels. Ooh, so I like that. I like that some of these daily levels are around 72, 73. I like a little bit lower just because we have, this, and we have a lot more wicks, right? A lot more wicks. So we have two daily levels, 72 and then 73s. A little bit not as aggressive. We have another daily level right at 65. That was a beautiful one. So we are bumping up against one as well, 68.10. If we do break out, then yeah, I could very realistically see these markets coming back up into these 70s. So that being said, we do have 5 minutes until the 8 p.m. open. Let's see if we could find a trade opportunity or example that we could go over tonight. So after that analysis, remember this is a demo account. It is not a signals class. If you guys join me all the time, we do this for educational purposes only. It's great to walk through this trade. It's exactly the way I like to trade, a breakout trade, how to manage a stop loss, how to manage a take profit. I walk through this trade. We kind of journal it and answer questions. So we do have 5 minutes going through this, and yeah, first thing I'm noticing on this 5 minute, look at this. There's a lot of resistance here. So a breakout to the long side, maybe targeting these 70s, these upper 70 or 71, 72. So a breakout to the long side targeting those 70s. I'm not really liking it to the downside, but if we do break to the downside, maybe the 61. So this is a tough market to trade to the downside. It's not as clear to me to the downside. We have a lot of support, right? And very similar to how it was the last time I was talking about gold, is around 65, 66. This is a nice support zone, and it seems to be, more on the wick side, as it's, not as clear of a break. So I am liking the long side on gold. Let's watch it. Let's see how this plays out. This is a 1 minute chart. Ooh, let's get to some, maybe we have a time for some quick questions. PPI and CPI this week, right? Tuesday and Wednesday. I believe so, Tony. I'll have to double check. So show notes blogs will be in the doctors for... That was not a question. That was just Gabe coming into the chat, messaging me, giving me some information. Oh, interesting. Oh, you know what? Nick Vertick's show was great. I'm gonna have to watch that. I heard that there are some hotkeys that are now available. I'll have to take a look. I haven't seen it. That's just what I heard, and I probably missed it. We'll see. Yeah, lots of news going on. What signal am I looking for to enter? So I've been journaling this trade almost every single night on slow markets for gold. And two things. I like a breakout. So if we do break out above this, resistance zone, for example, and you'll watch me trade this. And that's the point of this, where I'm going to try and trade this in front of you so you guys could kind of see, what I see, and then I could walk you through what I'm talking or what I'm doing. Hopefully be able to think out loud whatever I'm thinking. I'm going to try and just tell you guys as I'm thinking of it. But yeah, so if we do break above this resistance zone, then I could see maybe a push back up to the 70s. So that could be a trade. It's something I am liking. I am more in favor of this based off of some higher technical analysis. The other side is to the downside, right? If we do break below this, maybe we could see these 61s. I think there'll be a big drop, then bounce like the open today. There is something to that, right? Because like I said, we're analyzing, the goal of this is for purely educational. This isn't saying this is a good trade. This is a great trade. We see a spike in volatility at 8 p.m. Central each night. And the goal is to see if there is an opportunity. Over the past 2 months, it's been really great. It's been fun to trade. There has been a lot of positive that came from this. Above anything else, it has been a great learning tool. So that way we could get in, get out, move the stop loss, journal it, ask questions. We have a lot of new traders. We have traders from all over the world who's, asking these types of questions. We have traders at different educational levels, different levels in their trading career, some new, some on the older side. And this is great for everybody. It's like a real trade, and that's the goal. All right, here we go. 8 p.m. Central, we are seeing a little bit of a spike right back down. So what I like to see is I'd love to see if we come back down into the 66 and then find a reversal. So I'm going to try and find a reversal off these lows. Not really. We're not really finding any sellers yet. And you can see that the spike in volatility, there has been a big spike in volatility. Obviously, you guys could see that compared to what we have been. Immediately got bought up. We came down to 66.4, back up to 67.3. A lot more buyers coming in. They're holding this up. Okay, I'm liking this. Let's see if we could get into a long. There we go. Got into 2. I'm going to go ahead and move my stop loss to the bottom of this consolidation, risking 25 ticks, and we'll consider some take profits up around 72. Let's go through. We can walk through it. One thing I want to get in is if we continue to break out, I'll get into another contract. So let's go through it. I'm going to go ahead and delete those resistance zone. So I'm perfectly fine getting into a third contract. And we'll go. Let's walk through this. Immediately, I have my stop loss here. Risking 25 ticks. Another area for a stop loss that I am considering is right there, risking 37. But to me, if we break through this support, the odds of us going back down even further are even higher. So let's do this. I'm a little bit early. The more probable trade is waiting for the market to break out. I did get in early on this one. That's one of my bad habits, is I tend to get in early a lot. And then whenever I get in early like this, I get punished for it. The more probable trade is the pure breakout, waiting for the market to break above, say, 68.3. I got in early, and let's see if it's going to punish me for it. What do you mean not seeing any sellers? How do you tell? I'm just looking at pure price action. What I was saying is we sold all the way down to 66.4 and immediately got bought right back up. A true break sometimes, and we see it here a lot, and you'll probably see it here tonight, is when we do break, if we do break, it breaks really fast, and there's a lot of momentum behind it. You guys, yeah, come in here and say I bought the top. Then it'll push the markets up. Here we go. Let's see if we could get the break now. We're going right back up. Okay, so first thing I am thinking of is, there is a possibility to move the stop loss to this point because we came down, we got rejected, and now we're pushing right back up. So I'm going to go ahead and just do that as an example, risking 17 ticks. So example 1, I'm going to go ahead and say this is going to be an aggressive stop loss. Oh, did we get triggered into the third? No, we could watch it. So let's go this. Aggressive stop loss. We just got triggered into the third. And this is what? Minus 16 ticks? Let me make sure. We'll go 18. So minus 18 ticks. With an aggressive stop loss. So aggressive stop loss would be 18 ticks. Let's see. We did get triggered in. We barely broke out of the resistance zone at 68.4. So now let's see if we could gain that momentum I was talking about. So the momentum is maybe what we're seeing right now, where the market doesn't hesitate. When it breaks, it just goes, and it doesn't slow down. So let's see if we could get that. So we're starting to see it a little bit. No slowing down so far. This has been a nice clean break. I'd like to see follow through, so even more. Maybe just, I don't want to say immediately get to my target, but yeah, this is not exactly what we're wanting to see, obviously. So there's not a lot of buyers. We went up, we ticked 68.8 and immediately right back down into this support. And so we'll see what we do. So there's a good example. That was not great for momentum on the downside, and there was not great momentum on the long side. So neither the sellers or the buyers are really wanting to come in and push this. If I try and take an example of momentum, I mean, you could see these nice vicious moves. Like that is what we're wanting to see on a breakout trade. Because when we want it to move, we want it to move now. We do not want it to hesitate. Yeah, and this on each side is very ugly. It's a classic trap. I mean, so far it is. NQ seems to be breaking down. Crude doing what we're looking for in gold. Longs are trapped. Is Crude just breaking out? No, Crude's not really doing much. Okay, as we wait for this market to move, let's get to some questions. And I need a glass of water. Could be because it's Sunday. Well, maybe, right? That's something that we can analyze, and we could review the statistics. And why we journal is because maybe there is a difference in how the markets react on a Sunday versus a Friday. Yeah, Okay, here's a suggestion. Let's see. Click the arrow next to the rectangle. I'm not sure what you are meaning by that. I'll have to reread that. And yeah. Remember, I'm still getting used to Topstep X on how to do this charting and everything. Gold just hit a bearish order block. Going through, reading the DOM, depth of market, trade. Today is a Japanese bank holiday. So that could be a big indication why maybe we're seeing the market react differently. Why wait for a loss? Because that is the trading plan, right? Where we can have our opinion, but we do not get, and this is a debate, right? Do we get smarter after we get into the market? For the way that I like to trade, we have a stop loss. My stop loss is here for a reason. We can give an example of what would happen if we trail it, right? We'll take minus 18 ticks. If you decide to, for whatever reason, like, okay, why would I wait for this thing if we're starting to break out and then we see some sellers step in? The question, I think I understood it. Why wait for us to stop out for a loss? Why do we not just close it up here? Well, my answer to this is, to me, that would be purely either an emotional decision, a judgmental decision based off of like a human interaction, right? I see this, I emotionally react like, oh my gosh, okay, get out. Now, there could be nothing wrong about that if that's in your strategy, right? Like, you can have that in your strategy. For the way that I've been trading, no, I either wait for it to hit my stop loss, or I trail it and then it hits my stop loss. That is the risk. 26 ticks here, 18 ticks on this one. But if you are able to find some reason to get out of your trade up here and do it consistently, and then be able to measure it and be able to, do that each and every single time, very consistently process over profits, then go ahead, right? If you were able to close it out up here or even for profit, great. There's nothing wrong with that. How long does it take for the payouts to hit your bank account? For me, it took 48 hours. When I've taken any payouts, it's been just a few days. One issue that's tough to quantify. Some nights you look long, others you look short. What is your basis for long versus short in order to definitively identify potential EV consistency starts here? Yeah, that's a great question. So tonight I went through that on a higher time frame, right? So I went through and I walked through it on a higher time frame that we've been bullish, we've rallied, we've broke through a lot of this. We've been looking for, we just broke out. This was not just, but what is this? Friday, we did break out of this 67. We broke out, tested it, break out. And so, yes, gold has been more bullish than bearish right now. It doesn't mean we can't be wrong and the market sells off, but very similar to crude oil, we did break out of this flagging pattern, and ever since then we've been in an upward trend. Now, it's been really choppy right here, so it could get ugly. It's not a very clean trade, but like I said, this trade is for educational purposes only. We want to do it. We want to talk through the trade, and I just deleted that one trade journal entry. So let me put that back there. So aggressive trailing stop minus 18 ticks. So there's that one. So if we was to move this aggressively, there you go. So here's an example to that question was, why did I wait for it to turn around? Because it's process over profits. Time and time again in my own personal trading, I see this happen. It doesn't happen all the time, but it can happen where I have a stop loss in here for a reason. And if I was to make an emotional decision to just close it out, then there's a percentage of me missing the move. And one of the worst things that can happen as a trader is you close out, you take a loss, you get out a break even or whatever it is, and then the market turns around and maybe it goes in my direction and it hits where I wanted to go and it goes towards my take profit. And then I'm sitting here frustrated, upset. Why did I close it out? Why did I move my stop loss? Why did I close it out early? Why did I just close it out for scratch, and then the market turned around and it went into the direction I wanted, or maybe it comes up here and hits my take profit. Those are the emotional roller coasters that we go through as traders. Is we don't know when the market's going to turn around. We don't know when to close it out. Emotionally, we could react, right? And then if you close it out here and it just sells off, then you feel good about yourself. When you close it up here and then it turns around like this, and then if it does go up and hits my take profit, then you get upset. And then the next time this happens, you hold it for longer than what you should have. And then you have emotional decisions that, find its way into your trading statistics. And then it creates, uncertainty, anxiety. And then when you try and analyze your statistics, you don't know if they're true statistics because you've made so many emotional decisions. Are those statistics true to your trading strategy? Is it your trading strategy or is it you, right? Can you blame your trading strategy when you're the one that's making the emotional, mistakes? Because you can have a really great trading strategy, but not make money because you're making too many emotional decisions. And so, from a statistical standpoint, the less human decisions you can make and discretionary decisions that you make, the easier it is to understand your statistics, the easier it is to, make changes. And it's just so much better, in my own opinion, is the less emotions you can have in your trading, the better off it is. Because stuff like this, and you're seeing it happen live, this happens. It really does. So I'm going to go ahead and move my trailing stop because we are breaking out. So I'm going to go ahead and that is good enough for me. Now that is a valid support, right? We have now made a higher low, so a higher low, and we have now made a higher high. And so now this is valid. I will move my trailing stop on this. And this is purely examples, right? So pure examples of the way that I like to trade. And we'll do some more theoreticals as this trade goes through. So another one, right? Maybe this is too early for you. It would be okay if you just leave your stop loss here, right? No, I'm not saying this one's right or this one's right. It's anything that you do in the market could very well be the correct thing depending on the way you like to trade. So, keeping your trailing stop here could very well be good and valid. Moving your trailing stop or your stop loss now could also be good and valid, right? Or moving it to break even, closing it out up here. I mean, there's so many ways that we can trade this market, and it's time and time again. It seems like every single class I'm talking about this when we go through this gold trade, because it's interesting. Every single time I place a trade during class or live in front of everybody on YouTube, so many backseat traders, so many traders that would do things differently. Why hold it? Why not close it? You should have taken profit. You should have done this and this and this and this. And that is the beauty of trading, right? Because 1,600 people here, 1,600 people have their own different opinions and their own different ways and styles of trading. They're not all the same. And that is the beauty of it. And we'll continue. Let's get to some more questions while we let this trade play out. Stop loss now, the solid stop loss is 18 ticks. Oh, come on. Yeah, 18 ticks. So I'm not going to, aggressive. Maybe you could say that's aggressive. I think that is a normal. I'm going to just go ahead and say normal. Oh, I just deleted it. Wait, if I hit cancel, does it? Oh, there we go. I saved it. I'm just saying normal trailing stop for me. Now, if it does come down and stop me out, oh well, that's how it is. On BA, the rectangle is on the left toolbar. You're talking about this? Yeah, I also have one up here. I have it saved, and I could drag it around. Like I said, I'm still getting used to this. I'm curious. I've seen these hotkeys, right? Here's the hotkeys. You can see the different options over here on the hotkeys. So I haven't used these. I'm not going to test them live in front of you, but that is new. It sounds like from Nick for a Tick's class. He has the new class Sundays. He is covering it at 4:15, which is going to be great. I'm excited to watch that. I missed it. I'm going to have to watch the replay. That And then, of course, we have Coach Jay's doing At the Buzzer while we're waiting here talking. I'm on top of Nick for a tick. While I'm at it, we also have Coach Jay. He's doing At the Buzzer, and that's after the market closes during the New York session. And I'm really excited to see that one as well. So At the Buzzer's 3:15 Central Standard Time, and it's Monday through Friday. So right as soon as the market closes, Coach Jay is going to be on there. He's been doing it on Discord, but now it's moving to YouTube, and I'm super excited for that one. So I have to throw those ones in there while we're waiting for this. Oh, there's Coach Jay in the chat, just shouting you out. Yeah, excited to have you on, having that At the Buzzer. Topstep's continuing to grow, continuing to create more and more value for everybody. And it's been a great, scapegoat for traders who just have that need to trade. I must trade. Instead of trading, you get to watch Topstep TV. And I absolutely love it here too. What else? What else have I missed? We do have, like I was talking about last week, we do have Brett Steenberger and Jared Tendler. Jared Tendler is going to be Wednesday the 14th. So this Wednesday, Jared Tendler is going to be here for the psychology side. And then Brett Steenberger is going to be on here as well on the 20th. Though these are the ones that I'm also interested in, guys. I'm shouting these out the most because I'm the most interested, and the hardest part on my side is just as much as I'm sure you guys probably don't believe me when I say this, but when I say the psychological side of trading is what I work on the most, it really is. The psychological trading, no matter what level you're on, whether you're brand new to futures, brand new to trading, or you've been here for 20, 30 plus years, the psychological part of trading is by far the hardest part. I still struggle with it sometimes. I know everybody here will always and will never be able to convince me that there's been a single person who does not struggle with it. Of course, there's times where I'm doing better than I am doing worse. We go through our ups and downs. I go through it just like everybody else. Richard Harris, no, I have not. One day I will. One day I will study the king of price action. Is that AI Brooks or Al Brooks? This is just not going too well. This is a very slow market. This is true slow markets. I think we're going to start to miss the volatility that we've seen the past couple weeks, because this is what we're used to. This is how the markets are normally. It's about like this. This is true slow markets. The reason why I called it slow markets. NASDAQ, not so much. We've rallied 30 points, which is very volatile for a normal session in the Asian session. This is still on the high end. Now go into what we used to be. This used to be like a 100-point move. Last week, this was a 100-point move. This week, so far, this is 30, 40 points, which is still on the high side. It's still pretty volatile. Just in case anybody's new, anybody is just joining slow markets, this is still a volatile market. Last week, this was a 100-point move. This week, this is about a 40-point move. On a normal, and normal is up to the eye of the beholder. During normal circumstances, this would only be about 10 or 20 points, half this. So there's not a lot of price action in slow markets. And once the markets get back to normal, then I get to go through some more of the fun stuff. How does Dakota normally trade slow markets? How do I have overnight trades? Lately, I have not held any trades overnight because the market's been too crazy, too uncertain, and too volatile. But once the markets start to settle down, maybe that's going to be a fun teaser. When the markets settle down, I will be placing trades overnight. We're going to be going back into our regular slow markets trading strategies. And I'm excited for that. I've missed it. I've changed my trading strategy, and yeah. Gold's starting to move. Look at that. Beautiful. I love when this happens. There's a good place for a stop loss. Like, you cannot argue with a stop loss like this. We cannot get any better in terms that this is holding. It's becoming a great area of support. Dakota, can you hold trades overnight? Technically, no. So overnight is considered the New York session close into the Asian session open. So for example, 3 p.m. Central, and then we open up again at 5 p.m. Central. So to me, I consider overnight to now, and then I go to sleep, and then I wake up during the New York session open. So that's where I like to trade. I like to place trades now or set trades up at this time of night, and then I will let them play out overnight, as in while I'm sleeping. And now it just depends on where you're at around this world, right? Whether you're in London, it's not overnight. It's throughout the day for you. For me, I'm considering that, 8 till 10 p.m. Central until 8 to 10 p.m. a.m. right around the New York session open. And I'll go more in depth. And that could be a good, I guess, hook on why you should continue to stay tuned to slow markets, because as the market changes, my trading also changes. I try and change my trading with the markets. Sometimes I'm a little bit slower than the markets at changing, but hopefully the markets get back to normal and I can start talking about some more, longer term trades, in terms of longer term as in holding it from now until the New York session open. And it's fun. It really is. And it's how I learned how to trade. That's how I became, the most consistent. And that is where I make the majority of my money in the markets. So yeah, market conditions definitely affects trading plans. I've had to adjust dramatically. Like I was saying on the NASDAQ, that used to be a 100-point move. I'm used to it only being like a 10-point move. And this gold open trade has been pretty consistent. We're not seeing too much volatility here tonight. We're just kind of chopping around back and forth. This is a great area for my stop loss. And, let's see if we can find some buyers in gold to see if we could push and break out of this ugly zone. I do like that we're holding these 66s, and we're continuing to push up here into these 68s. There is an argument. Now remember, if we talked about last week, there is an argument to use a time stop. And so for this example, you can use a time stop. Maybe, 15 minutes after 8 p.m. Central, and I'm still in this trade. This trade's taking forever compared to what we're used to. Maybe you just close it out now. Just say, hey, it's been too long. It's been 30 minutes, or right now it's been 24, 25 minutes. Wherever the market's at, just closed. And then you could say, okay, I locked up one tick, and it took 25 minutes on this trade. Very boring, really slow markets. Jeremy, that's impressive, making money trading while you sleep. That's how I learned how to trade. I wouldn't say it's too impressive. It really is boring. And I'm going to go over more of that. Like I said, this week it's going to be more of a mixed, and this is kind of my plug, or me advertising my slow markets class is, I'm going to be continuing to review my strategy, talk about strategies, doing my absolute best to help traders. And then we could do some fun stats. We could review stats like we always do, which is fun. And of course, this gold trade, right? This is not how I normally trade, but imagine doing this. And so I'm just going to give you guys an example. Imagine doing exactly what I've just done in front of you, but doing it on a higher time frame, 5-minute, 1-hour time frame. And this trade would go overnight. Of course, I would not move my stop loss because I don't move my stop loss when I'm sleeping. So if this was a 5-minute chart or an hourly chart, then, I would go to bed with my stop loss here. Maybe I have my take profit here, and then I would go to bed. And then this is an hourly chart or a 5-minute chart or 15-minute chart, whatever you use. And this trade just plays out while I'm sleeping. And when I'm at the bed, I know exactly how much I'm risking. I know where my take profit is. Number one, I've been getting used to Topstep X. So getting used to Topstep X has been a key factor in me getting used to trading again, the overnight session in this platform. And number two, the volatility. The market has been so crazy. I have not felt comfortable holding a trade overnight because of everything that's been going on the past 2 weeks. But, if this was an hourly chart, this is exactly how I would trade it. I'd look for a breakout trade. I would already have my stop loss defined, and it would either trigger me in. And then, when I wake up tomorrow morning, the market's either went up and it's hit my take profit, went down, hit my stop loss, or it's somewhere in between and I'm still in the position when I wake up, and then I can make a decision then. Yeah, like I said last week, these conditions are not normal at all. So first thing I'm thinking of now is I can consider moving my stop loss up just a little bit, so just under there. So maybe being a little bit more tight. So so this is an interesting decision. This is a very interesting decision. I don't make decisions like this very often, but this is only the difference of 3 ticks, right? 18 or 15. Should I risk 15 or should I risk 18? Which one is a better stop loss? My preference is just to keep that 3 ticks. I mean, it's still good, it's still solid, but sometimes some traders like the 15 ticks. You're saving 3 ticks. Every tick matters from that aspect. So I think that's going to be reasonable enough, because if this market does sell off, and if it breaks this, the odds of it breaking this are just dramatically higher now that we've already started to test. We haven't really moved. Yeah. Let's make sure I'm doing that. Okay. So that being said, now here's an example, guys. If this is a normal slow markets class, I would let this trade run overnight. This is a trade. I would just move my take profit there, and I would go to bed. I'd go to bed, leave my, turn my computer off. I'd just go to bed. When I wake up in the morning, we either hit my stop loss or my take profit. I know my risk reward. This is now over a 2-to-1. I know my risk. I'm risking 2-to-1, about $450 to make 1,000. So trades like this, I love them. Typically, I like a 3-to-1 risk reward. Yeah, that being said, let's go ahead and move on. We only have 30 more minutes left, and I am going to be ending slow markets a little bit early. Now, remember, guys, just a reminder for everybody here, slow markets on Sunday, I'm going to reduce that a little bit. We have a lot more fun things that's coming out, like we said, or like I was talking about. We have Nick for a Tick coming on Sunday afternoons to catch the Asian market open. We have Coach Jay for at the buzzer. And then, of course, we have so much coming. There's so much in the works I'm excited for. But it's Sunday. It's the weekend. And, I've been on Sunday for the past few weeks, and the more I do it, it's just Sunday's a day for rest. We have football coming on. We have, the number one is spending time with family, and it's of course Sunday. So I'm most likely going to be scaling back on Sunday, and we'll see how it goes. I'll keep you guys updated this week. So that being said, I'm going to go ahead and move this stop loss. I'm going to tighten it up a little bit. Let's go ahead. -3 ticks. That's my normal trailing stop. Now, don't get me wrong. I love being here, and I love, doing this. But some things can be more important. It really can. As much as I love streaming and helping you guys out, some things must be put first in a person's life. So that being said, let's take a look at some of your guys' statistics. Okay. I'm going to review this once. Let's take a look. I have to see. I want to check this before putting on screen. You know what? Yeah, why not? And keep me updated on the gold trade. Here's the gold trade. Keep me updated if something happens. I'm going to go ahead and zoom in, and we'll spend the next 10 minutes on this, and I'll finish it up. Oh, I'm not going over anything. Let's just keep to the program. So here's someone says, I just passed today. let's take a look at this. Just passing today, it looks like 100K combine, you know, $6,000. We have, now we're going to see this a lot. 72% win rate, just over 72% win rate, and a 0.73 win loss. So average winner over average loser. So this is, and we're going to see this over and over again, and you guys will see this as well. You know, understanding your statistics is such a key aspect of trading at all different levels. So as you guys can see here, your average winner is not as big as your average loser. Your average loser is bigger. It's not dramatically bigger. I mean, it is $150, $130 bigger. So, sometimes that is hard to keep up, because what you need to do is you need to have a much higher win percentage. And you can see, you've done that here. And then the risk, the more important is going to be the profit factor. The profit factor is just over 2, which is amazing. Anything over 1 is profitable. And of course, as you can see with any trader statistics that has a bigger loss over a bigger win on the average win, upside down risk reward, you do see the bigger down days. The down days are typically a lot worse than those up days. But overall, this is another great example of how you can have an upside down risk reward. As long as you're keeping the trade percent higher, you will have a positive outcome. 50-50 on the winning days. Let's scroll through this. I'm trying to go through this quick, trying to touch on key examples. Here's the equity curve. I love this. You're not letting your emotions and one day get too far out of hand. One can argue that this loss in one day could be a little bit too big. That could be a very, very dramatic day where it could wipe out, 3 or 4 winning days. Let's scroll down. Yeah, you can see it here. You can see that ugly losing day. $2,000, and it could wipe out a couple of your winning days, especially at the beginning. Let's go through this. I like this. Hold times are looking good. Yeah, it looks like that's just one winner. Hold time, good hold times. I do like that. The majority of your trades you are holding about 10 to 30 minutes. Not too bad, actually. I was thinking it was going to be a little bit ugly. I mean, you do make money. You pass this. This is a combine, so it's not as much pressure. It's just a combine, but I'm not just going to give it, brush it off because you passed this and now this became an XFA, right? So, I was going to say, maybe your bad day wiped out a few of them, but no, this week or last week, it looked really, really well, right? Minus $2,000 on your ugliest day. The very next couple days, it's not too bad. The worst, what you want and what I typically see, you have days like this back in August, 200, 500, 400, and then you have one nasty day and it wipes out an entire week. But that's not the case here. You could probably have 2 of these days and still come up profitable. So I like that. Looks like you passed. You passed tonight, so congratulations. I do like that you passed tonight using micros. It looks like you were trading gold micros. That is good to see. Let's go ahead and move on to the next. And it did stop me out here on gold, minus 3 ticks. So I'm curious, if I would have kept my stop loss down here, what would have happened? So normally stopped out 3 ticks. If I would have had that normal stop loss down here, you know what? I could dare label this. I could probably say this is the aggressive one. Just disregard my spelling. You can see I use the computer to spell all the time for me. So and we can just see how this one plays out. Okay. Anyway, let's move on to one more. Let's go ahead. Okay, here we go. This is a good one. Here's an Express account. So Express account, there's a lot more on the line when it comes to an Express account because you could become eligible for a payout. First thing I notice, not too many days in an Express account, so these statistics can change dramatically day to day. I like this. Here's an example of a trader keeping it 1-to-1 on the risk reward. 68% trading percent, winning trade percent, and that leads to a really high profit factor. So very similar to the last trader. So the last trader, do you remember how the last trader had a much higher win percentage? So 70, I think it was in the 70s. Correct me if I'm wrong. Let me see. Yeah, so I want to compare these. I'm not saying one's better than the other. They're both around $6,000. But look at this. A little bit higher of a win percentage and a lower average win versus average loss. And we go to this trader. Lower of a win percentage, but a higher average win, higher loss. And the profit factor is, you can see the difference in the profit factor really close, but each one of these things are very important. They are connected to each other. You cannot look at one and say this is completely independent and this is all I should focus on, because that's not. You need to look at all three of these items in order to truly understand how you're trading statistics. This is looking good. Immediately, I do like, Express Funded account. There's a lot more pressure on the line, and $6,300. So great trading. Oh, I do like this from Coach T. Not only should you look at your days, right? What's your most profitable day? What's your least profitable day? But look at the times, because this is just, if maybe not, maybe even more important. When are you trading? When is your best time of day that you like to trade? So I see this happen a lot in traders, where they make money early in the morning during the most volatile, maybe during the New York session, and then they stay and they hang out for around lunchtime, and then they start to even trade worse, and then comes power hour and they trade worse during power hour, and they end up giving their entire good day back. Whereas if they would have just quit in the first 2 hours, they would have left and had a positive day. And that could also help with over trading. So this is also very important. Understand when you are trading, what is your best time of day to trade. For me, my most profitable time of trading can be the New York session, early in the morning, and then the Asian session, right around slow markets time. So definitely understand the time of day and understand, maybe instead of trading more, trading less. Less is more, right? Charmin. I don't know if I should say that, but maybe we could get some fun sponsors out here. Sponsored by toilet paper. Let's take a look at this. I do see if there is any negative on this trade report. It looks like you're really scalping, right? Scalps, a lot of really quick in and out trades. It's working out for you. Holding your losses a lot longer than you're holding your winners. So that could be something negative that could play into effect in the future. Now remember, you only have 7 days worth of trading, or 6 days worth of trading, and so your statistics could change very dramatically, right? The less amount of time you have, the more dramatic and the more weight that your statistics puts on your next trading day. So this is something to pay attention to. How long are you holding your winners versus how long you're holding your losers? And then as the markets change, is this going to change as well? A lot of your trades, it looks like it's under a minute. So under a minute, a lot of your winning trades, 15 seconds, 45 seconds. If the market starts to slow down, are you still going to be able to keep this? I'm not sure. That's hard to say for sure. But understand it. Make sure that you're aware of it. Markets are going to change. The past, it looks like you've made this $6,000 in an Express Funded account over the past 6 days. Understand that these 6 days have not been normal trading. When that changes, how are you going to change with it? Yeah, really, I can see there's 44 trades here. Looks like you're trading, have some micros. You can see that's interesting. Not going to do too much in-depth analysis of this. Just scalping the market. I do like that. It makes sense to me that, during this high time in this high volatile market, scalping has been the thing to do. See profit, take profit, but just always keep in mind that when the markets change, This trade duration could, rear its ugly head. And whenever you hold losses longer than winners, you can see even a continued change in your average win versus average loss, and maybe your trade win percentage. That being said, I think that is good for the trading statistics. Yep, stop loss would have been hit out on this gold, minus 18 ticks on the normal, maybe minus 3 ticks on the aggressive. We did not break up. It looks like we're actually starting to break to the downside. Let's do a few more questions. I'll hit a few plugs, and then we'll call it a night. Everyone's, take that time. And as I was talking about the trader psychology, so it's Sunday, right? We have trading psychology being at number one for me. If not, it's tied with number one. Trading psychology, no matter how good you think you are, myself and every trader that I know who's successful, man, I cannot stress how important trading psychology is. So please utilize. I'm going to be there. I'm going to be joining Jared and Brett. And like I said, I'm going to repeat the times. Jared Tendler is going to be on August 14th at 11 a.m. So I'm going to be there. It's very important. If you can't make it, if you miss it, watch the recording. It's very important. And you might not think it is. It is. And then the same with Brett, right? Brett Steenbarger. He's going to be there later. It's going to be the 20th. So August 20th at 11 a.m. Same thing. If you don't show up, if you for some reason you can't be there, watch the recording. I'm going to be there. It's just so important. You cannot stress, and I cannot stress enough how important a human and a person's mental state is. Trust me. Trust me more than once. And then, of course, Coach Jay with At the Buzzer and Nick Vertick, if you guys missed it. And that being said, man, I really enjoy trading with you guys. It's never boring. Actually, I forgot to do. Let's go ahead. I'm going to take a screenshot of this. As always, journaling all my trades for this gold, and then maybe I could do a review and we could understand this gold open at 8 p.m. There's something to it. There really is. We see a spike in volatility every night at 8 p.m. Central, and this is the way I review a trading strategy. I don't just jump in and start trading it with okay, I'm going to trade this and this is my new strategy or this is my new plan. It takes time. It really does. 2 months, 3 months, because you must trade a strategy through different market conditions. And we're seeing different market conditions here on gold. We are reviewing this during very volatile, uncertain times that we've seen the past couple weeks. We're trading this and watching it during slow times like we've seen tonight. And each time is very, very different. So it's very important to review a trading strategy, review your statistics for a longer period of time, not just a week. It would be easy to say, oh, you know what? I lost money. I just lost, 3 ticks or 18 ticks. This strategy is no longer valid. I'm going to throw it away. And then you keep doing that. And then you get stuck into a cycle to where you filter through strategy and strategy and strategy and strategy. And then soon you start to blame yourself and you say, you know what? Maybe it's just me. Maybe I suck at trading, and then you never become a profitable or consistent trader because you keep going through so many different strategies when at the end it wasn't the strategy. It could be very well a good strategy, or maybe you have a good strategy and you just don't give it the amount of time that you need to review and understand those statistics. So, okay, guys, I'm going to leave it there. It was fun, and I will see you guys. I'll see everybody tomorrow morning. If not, tomorrow night. I will be on fast markets tomorrow morning, and then again, slow markets in the afternoon. And yeah, until then, excited and take care.